Stop scrolling right now, because if what major banks are quietly signaling is even half true, the traditional bank deposit you've trusted your entire life could be on the verge of a radical transformation, and XRP just moved from crypto speculation into the center of the global financial plumbing. Welcome back to the XRP Insider Network, where we decode what institutions say versus what they actually mean. And if you value insider-level analysis without the hype, but with full transparency, smash that like button, subscribe, and turn on notifications, because what we're breaking down today is already being misreported, misunderstood, and in some cases, intentionally softened to avoid panic. Now let's be very clear from the start. No bank has issued a press release saying XRP will replace all bank deposits tomorrow, and anyone claiming that outright is exaggerating. But what has happened is arguably more important and far more dangerous to ignore, because multiple global banking institutions, central bank working groups, and regulated infrastructure providers have now openly confirmed that traditional bank deposits are being re-engineered into tokenized on-chain instruments, and XRP is sitting directly in the middle of the settlement layer discussions. This is not financial advice, and nothing in this video is a guarantee of price outcomes. But the direction of travel is now visible if you know how to read between the lines. Here's what triggered the shockwave. Over the past year, banks across the US, Europe, and Asia have acknowledged that the existing deposit system is too slow, too fragmented, and too risky in a 24/7 digital economy. We're talking about overnight settlement delays, trapped liquidity, correspondent banking friction, and trillions sitting idle simply because systems can't talk to each other. And when banks say tokenized deposits, what they're really saying is, we need deposits that move like crypto but stay regulated. And this is where XRP enters the conversation, not as a consumer replacement for your savings account, but as the neutral bridge asset that allows tokenized bank liabilities to settle instantly across jurisdictions. That distinction matters because it's the difference between hype and structural change. When banks experiment with tokenized deposits, they're not creating new money. They're wrapping existing deposits in a digital form that can move on distributed ledgers. But the moment you move value between two institutions, two countries, or two currencies, you need instant, final settlement without pre-funding. And that is the exact problem XRP was designed to solve. Insiders inside financial infrastructure groups have openly stated that pre-funded Nostro accounts are inefficient and capital destructive, and XRP eliminates the need for them by acting as a real-time liquidity bridge. This is why you're seeing XRP mentioned in the same breath as tokenized deposits, CBDC, interoperability, and regulated stablecoin settlement frameworks. Not because banks love crypto, but because the math forces their hand. Here's the part most people miss. If tokenized deposits become the standard, banks no longer need slow batch settlement, which means they no longer tolerate multi-day reconciliation, which means systems like SWIFT messaging without atomic settlement become insufficient, and when that happens, liquidity rails become more important than messaging rails, and XRP is a liquidity rail, not a messaging system. This is why Ripple has spent over a decade positioning XRP not as a retail payment coin, but as infrastructure. And whether you like Ripple or not, the architecture is now aligned with what banks are openly demanding. The controversy comes from the implication. If deposits are tokenized and move 24/7, the distinction between crypto rails and bank rails collapses, and the value layer becomes shared, meaning assets like XRP don't need retail adoption to be systemically important. They only need institutional flow. This is why you're seeing banks test private ledgers connected to public settlement assets. It's also why regulators are suddenly more interested in defining what is and isn't a security, because settlement assets that touch bank deposits cannot exist in regulatory limbo. And yes, this is exactly why the XRP legal clarity battle mattered so much, because deposits touching an asset deemed non-compliant would be radioactive. Now pause for a second. If this analysis is already changing how you see the XRP narrative, make sure you hit like and comment XRP rail below, because engagement tells the algorithm this content actually matters and it helps more people escape the clickbait nonsense. Now let's address the emotional headline directly. XRP replacing bank deposits is not literal replacement, it's functional displacement of how deposits move. Banks will still hold deposits, but the rails underneath them are being rebuilt, and in that rebuild, XRP is one of the very few assets that solves speed, cost, neutrality, and scale simultaneously. Stablecoins fail at neutrality because they're issued liabilities. CBDCs fail at cross-border neutrality because they're sovereign, and correspondent banking fails at speed and capital efficiency. XRP sits in the narrow middle where none of those constraints apply. This is not conspiracy, it's systems engineering, and once you see it, you can't unsee it. The final piece in this block is the quiet admission coming from banking white papers that cash-like settlement assets are required for tokenized deposits to function globally. They avoid naming XRP directly sometimes, but the characteristics line up perfectly, which raises the real question, not whether XRP replaces deposits, but whether deposits quietly begin to rely on XRP without the public ever being told. And that brings us to the next phase of this story, where the risk, the opportunity, and the backlash all collide. Now here's where the story gets uncomfortable for legacy finance and explosive for XRP holders. Because once deposits are tokenized and settlement becomes instantaneous, the power structure of banking changes, liquidity becomes more transparent, bank runs become faster, and regulators lose the comfort of delayed visibility, which is why this transition is happening quietly. In pilot programs, sandboxes, and limited scope trials, banks are not shouting this from rooftops, because the moment the public realizes deposits are just programmable liabilities moving across shared rails, confidence dynamics shift, and confidence is the real currency of banking. This is why the messaging is so carefully worded, exploring, testing, researching. But internally, the direction is already set. The current system cannot scale into a tokenized world without a bridge asset. And XRP keeps showing up because it solves settlement without becoming the deposit itself. That's the subtle genius of the design. XRP doesn't compete with banks. It complements their need for speed. This also explains why Ripple's partnerships focus on infrastructure providers, not consumer apps. Because the end game was never you buying coffee with XRP, it was banks settling billions without friction. Now let's talk about the fear narrative. Critics say, if XRP becomes critical infrastructure, regulators will kill it. But history shows the opposite. Once something becomes embedded into system stability, it gets regulated, not removed. And we've already seen that trajectory begin. Legal clarity, licensing, compliance alignment, all boring on the surface, but existential underneath. This is also why speculation needs to be labelled honestly. No one can promise XRP price outcomes, and anyone doing so is lying to you. But what can be said is that utility-driven demand behaves differently than hype-driven demand. Infrastructure assets don't need retail mania. They need volume. And volume comes from necessity, not excitement. This is where the replace deposits headline morphs into something more realistic, but arguably bigger. XRP doesn't replace what you hold in the bank. It replaces what banks use to move what you hold, and that distinction could define the next decade of finance. Now here's the risk most people ignore. If XRP becomes a settlement backbone, volatility becomes a feature to manage, not a bug to eliminate, which is why liquidity corridors, market makers, and on-demand liquidity models matter. XRP is designed to be used and released, not hoarded, which challenges the typical crypto mindset. And this is where education separates insiders from gamblers. If you're still viewing XRP through a number go up lens only, you're missing the structural play entirely. This is why institutions move quietly, while retail argues loudly. And speaking of retail, if you want more deep dive breakdowns like this that cut through both maximalist hype and anti-crypto fear, subscribe now, because this channel exists specifically to map these shifts before they hit mainstream headlines. The last piece of the puzzle is timing. And no, this is not a countdown prediction, but transitions like this don't happen overnight. They happen in layers. First pilots, then limited production, then interoperability standards, then quiet dependency. And only at the end does the public realize the rails changed under their feet. We are currently between pilot and dependency, which is the most asymmetrical information phase. That's why narratives feel chaotic right now. Some people scream scam, others scream moon, but institutions are just building, and building doesn't trend on social media until it suddenly does. So when you see headlines screaming, "Banks confirmed XRP replaces deposits," don't dismiss it outright and don't believe it blindly. Decode it. What's actually being confirmed is that deposits are evolving. Settlement must be instant, and XRP fits a role almost no other asset can fill. That's not hype, that's architecture. And architecture doesn't care about opinions, it cares about efficiency. We'll continue tracking every development, every pilot, every regulatory signal, because when the rails are finished, there will be no announcement, just a quiet flip. And by the time the average person notices, the opportunity window will have already narrowed. Drop a comment below with your take. Do you think banks will ever admit XRP's role openly, or will it stay buried in the plumbing? This is XRP Insider Network, not financial advice. Stay sharp, stay curious, and stay ahead.